Hi, this is Zach here with the weekend edition of the Bulletin Board Heroes here at Zach's Traders Cafe. It is Sunday, the 25th of June. Starting with the FTSE 100, where it's been a horrible week in the sense that we've lost the 200-day line, 75.38. We've broken an uptrend line from back at the, basically the October uptrend line there. Just below it, say 75.20, and two end-of-day closes back below that 200-day line. Implies that we're probably going to hit the April support line there around 73.80, let's call it. The best thing about the market, I suppose, at the moment is that the RSI is now just below 34, so not too long to get down to RSI 30. And if you look back, see RSI 30 has been the place to buy the dip in the UK index. The other point to note is that we had a double failure of the RSI at neutral 50, especially the last one. Was quite ominous, and it did work as a sell signal. In fact, we had three of those back in May, and that also works as a sell signal, so something to look out for there. Moving on to the DAX, which hasn't been able to resist the summer malaise that we seem to be settling into now. You could say that that support line there is slightly lower than I've drawn, but it's still around the 50-day moving average level, the blue line there. That is around 15,900, and below that, the risk of a test of a support towards 15,700, that end of May support. Below that, probably up to that mid-March peak around 15,300, but not expecting worse than that at this stage. RSI at 42, so we've basically pushed down below the 50-day line and lost RSI 50 as well. We'll need an end-of-day close back above 15,900 to reinstate the idea of heading towards the top of that rising trend channel from back in September, as high as 17,000 by the end of next month. Moving on to the Dow, which has managed to achieve so far managed to achieve a double bull trap through the RSI, rather the resistance line there that we had there from back in April last year, and had a full storm there basically the end of April, and then a larger full storm at the middle of June. Current situation is that below 34,000 we were looking for the risk of a test of the 50-day line around 33,600. There's still the chance, though, I think, given the way that the RSI is now pushing below neutral 50 to 49, of testing the 200-day moving average area again around 32,800. So more of a range-bound situation here rather than a build, but at least the 200-day line is still rising, and we are above that 50-day line, so we could get out of jail if we stay above that 50-day moving average. On to what is currently the star of the show. Not much competition, obviously, given the state of the indices at the moment. Here we've got Bitcoin, which is holding above the 30,000 level. We've got support near term around 29,700 above that. Still have the chance of hitting 35,000 or more by the end of next month, which is basically June-July resistance line projection, top of that rising trend channel from last summer. And 50-day line, and both the 50-day line and 200-day lines now rising. The only sort of slight negative at the moment, apart from the fact that we've come up quite a long way in the recent days, is the way that the RSI is now at 70 plus and is hence overbought. But we can have that state of affairs lasting longer than people expect, especially within a rising configuration that we've got there at the moment. On to the stocks, and starting off with Avacta, where hopefully the bears have had a decent slap in the face. This time last week they were licking their lips, and now they may be licking their wounds. Closing this week right on the 200-day line around 122 pence, gapped up during the week as well. So it's a bear trap gap reversal from below £1. Above the 50-day line at 115, we're looking for not only a proper clearance of that 200-day line, but a retest of the post-March resistance around £1.40 over the next few weeks, even if the shares push back after that. Best case scenario target is a March resistance line projection up to £1.60, but I think might have to postpone that for a while just to see how the shares behave around current levels. Onto a stock which is displaying one of our favorite setups at the moment, and that is unfilled gap to the upside, which we had back on Wednesday. Broke the gap up a day around 26.5 pence and have soared since. Initial target here around 33 pence, and that resistance line there from April. above 33 pence, we've got the chance of a move to the top of the broadening triangle from back in March, and the 200-day moving average at 48 pence, perhaps as soon as the end of next month, but obviously that would take some going. Moving along to a stock where I was surprised with the big news regarding American clearance, that the shares were only up 6% by the end of the week, but we are back above the 200-day line for BSF, which is rising. Bullish divergence there as well since May. So hopefully it's just a matter of time before we break the 50-day line there at 14.5 pence and head up to the top of that rising trend channel from this time last year, as high as 25 pence, maybe by the end of August at the current rate of progress. But the key here really is breaking that 50-day line, as that has blocked progress since the middle of April. Onto a stock which has its fans, and hopefully will have more fans over the near term here. We've got Cleantech, which basically bounced off post-August 2022 support last month, higher low for June, and still waiting for that definitive clearance either of the 50-day line, currently around 44 pence, 45 pence, and the 200-day line at 50 pence. Probably, if you're cautious, you'll wait for an end-of-day close through the 200-day line, hoping that this be second time lucky for June. RSI just pushing through 50 as well, so it shouldn't be long before we have an attempt on breaking 50 plus. Best case scenario target over the next few months would be up towards retesting the February peaks, but at the moment we're just looking for maybe up to 60 pence in April resistance if we break 50 in a definitive way. Onto a stock which has obviously been a bit of a rough ride over the recent past, but looking very interesting here on Eurasia. We've had a double bounce for the RSI on neutral 50, which is a continuation signal on the upside. Still need to break 3.5 pence. If we can do that definitively, then we're looking for 5 pence maybe by the end of next month. But obviously a rally like that would be the first proper rally the shares have had in many months, and maybe that is overdue, but that double RSI bounce at 50 is the thing to look at there, and holding above the 50-day line at 3.06 pence as well. Moving along to a stock which I think the bears hopefully have given up on attacking. Here we've got Eden Research. I think we've been calling this up from around the 4.5 pence area with a break of that resistance line there from December. We've got rising 50 and 200-day moving averages. It's a golden cross which we had for the end of the week, which is pretty impressive, especially if you're a bear or going against that. Beautiful bull flag there. Looks like a mid-move consolidation. So end of day close through the old peak there around 9.2 pence. Should be enough for a new leg to the upside, and at least 10 pence over the next couple of weeks, but not many golden crosses around the place in small caps at the moment, so this could be a decent mover. If you think that 10 pence is not enough, probably the next level up would be up towards 12 pence and that 2021 resistance line projection from July. This stage, only well below 8 pence. Recent support would delay the idea of 10 and then 12 pence. On to a stock which is slowly turning around, EQTEC, and it's been rather horrible of late, but looks as though the shares are starting to get back in business. The old support there back in May around 0.18, so looking for more end-of-day closes at 0.18 or better and above the RSI 50 level. If you're fussy, maybe above the 50-day moving average. 2 to 3 month target, or at least 2 month target up to 0.28 at the top of that broadening triangle from March, and hoping that we don't see any much price action back below 0.16, which has been recent support. Moving along to Hummingbird, which had a great run from March to May, and the current situation is that we're looking for resumption of that trend. We've still got a sharply rising 50-day line around 15.75, waiting for a break of that May resistance line around 16.8 pence, but there's already been a bear trap this week from below the old support there from the end of April around 13.75, above 13.75. We're looking for the shares basically to retest last month's resistance at 20 pence, hopefully well before the end of July. Moving along to one of the stocks of the week, up nearly 50%, Utopia, which has carefully remodeled itself as a medical cannabis company. Here you can see that our first target there around 8.5 pence was hit, end of day close above 8.5, and we're looking for the 200-day moving average area and that March resistance line projection at 13 and 3/4 as soon as the end of next month. Stop loss at this stage back below the 50-day line at 7 1/4, so it looks like a reasonable risk-reward situation. Like Belluscura, we've had an unfilled gap to the upside, and we've kept on going, backed by bullish divergence, so plenty there at HUI to shoot for if you're a bull. Moving on to a stock which looks as though it's rehabilitating itself quite well, Sovereign Metals, and here we've got both a rising 50 and 200-day lines, and that should suggest that for July we're heading into a golden cross buy signal, which should hopefully give the shares enough momentum to head up towards 36 pence by the end of next month, especially while they hold above the 50-day line at 24 pence. But a bullish divergence in there ahead of this move, but the key here is the rising 50 and 200-day lines. Moving along to a stock which I haven't looked at for quite a while, Shield Therapeutics. Here we've got a September resistance line which has been broken, rising 50-day line near the lows, and uptrend line in the RSI window, so we should be on our way above 7 pence and looking for 10 pence as soon as the end of next month. On to a stock which is also starting to recover, maybe both on a fundamental and a technical basis. Here with the Touchstone, we've broken a line of resistance there from back in April. We've also broken the 50-day moving average at 61 pence, let's call it, which means the next target on the upside up towards the 70 pence area, which was April resistance. So above 60, looking for 70 on Touchstone. Moving along to a stock which has recovered over the course of the spring, going into summer, and that's Tirupati. Had a full storm through 40 pence earlier this month, but at least while we're above the 200-day line there around 35 pence, looking for that to be retested up to the 43 pence area, and then a bigger picture maybe as soon as the end of August up towards the 60 pence zone at the top of that broadening triangle from back in August last year. But the key here, holding that 50-day line over the near term. Finishing off with Seed Innovations, where it's been a slow process of recovery, but the key here is basically this month's bear trap rebound from below 1 3/4 pence. Above that, we're looking for 2.4, maybe 2.5 pence by the end of next month, especially if we can stay above that 50-day line around 1.9 pence and that broken January resistance line there at 1.9 pence. So a reasonable setup there. RSI remaining above 50 on the latest share price dip, which is encouraging, as is the bullish divergence line in place since back in February. So lower lows for June, but a higher RSI trace there. That's it for me today. More updates during the week.